All right. So I don't believe I produced any content about the Singapore dollar and the Swiss franc cross. So I'm actually about to get to that. So what we are looking at is a pair that is kind of stuck at a good point for my strategy, being that we're at the 0.675. That is considered a quarter for me. And at these quarters, at the ends of these quarters, I typically find my highest risk to reward ratio. What we're looking at is it's failed to transition to the upper ranges of 0.75. So when that happens, we typically like to take a turn down. Now, what happens when we do a turn down from the whole quarter point is we'll either go to the 50% range or we'll do a whole retracement to the 0.65 area. Now, the reason why I focus on quarter point zones and these whole numbers is because I am looking for at least 250 pips of profit, and it looks like this specific pair is going to be a good candidate to bring in minimum 250 pips of profit, if not more. And I say a minimum of 250 pips profit because we're looking at the IV rank. The IV rank has been kind of mute for the last month, and yeah, last month the IV rank has been kind of mute, hasn't really gone anywhere. And we're on the 4 hour chart, and that got me into the thought process of, okay, we've been at this area, we have not progressed even though we're in a bullish market, and we have a very low IV rank. What's going on here? We have stalled out at 0.765, and if we truly stalled out at 0.675, I'm okay with seeing that continuation of a pattern and staying in that position. So if we have a couple of more days of stalling out, I'm perfectly fine with that because I'm actually looking at the opposite side. So with IV rank being as low as it is, my main thing that I want to see is the IV rank that starts to go up. When the IV rank actually starts to go up, that's giving us um, our initial reaction into a more volatile market. So I have a couple of stages that I look at in terms of taking a counter trend on the IV rank. So first of all, I do have to start to see the IV rank start to go up. Second condition is that IV rank has to pass 22. Um, Now, it doesn't have to pass this condition for me to get in it, but it has to pass those conditions for me to at least want to stay in it, and take any type of losses with that. I want to be in for the move when it happens. I really don't want to be reactive to it. I'm okay with being predictive with it. So all that said, we are in the early part of the quarter. Usually, when what that happens is once we find a very strong trend in a quarter, we tend to stick with that strong trend for a good amount of the quarter, uh, like we've seen back here in quarter three. And well, quarter two is kind of iffy. We were kind of all over the place, but definitely in quarter one, we saw that very strong drop. All right, so with that out the way, let's actually switch down to a smaller time frame and see what I was looking at when I decided to put on this trade. All right, so we are at a 65-minute chart. So within the 65-minute chart, everything else is going to stay the same quarter points, um, or same quarter points, which is going to be this green zone, same 250 pip levels, which is going to be the fibs that I have placed on here. What we're really interested in is this IV rank. Now, remember what I said I was looking for when we take a counter position on the IV rank is a strong, or not a strong, but at least some continued momentum to the upside. And that's kind of what we've had here. Since the about the end of September, we have started to actually go up on the IV rank in the 65-minute chart. Now, it takes a while for that to be reflected on the 4-hour chart, but if you're able to get this trade down, you can actually make some good profits here. So you can see that I did not take. You can see that I wasn't able to get in at the very top, which is really where I like to get in at. Let me actually get one of these off of here. You're looking for that one. Get that off of there. All right. So I wasn't able to call the top, but what you can see is for past, I want to call that almost, 2 weeks, we've kind of been basing right here. So the thing that I'm looking for is to actually break this basing pattern. We have the volatility to do that. We are above 50. Matter of fact, we are at 60 at the moment, pushing the market down. But as you can see, it's still stuck there. Hopefully we'll get down. If we do get down, the first major area that I'm looking for is going to be this area between 20% and 25%. So if price isn't able to either come to the 20 to 25% price target of 0.0675, I'm expecting a rebound to happen. At that point in time, if I do start to see a rebound, I might pull out of this trade, go ahead and take the profits that I have. But if it actually looks favorable to either hold and drop or just completely drop, then I'll actually be okay with that. That is what I'm looking for. Once we pass that zone, the next zone that I'll be paying attention to would be this 50% move. If we see a rejection at the 50% move, then that gives me confidence to say that we may pull up either to the 20 to 25% area, or we may pull up to 0.675. The next target off of that would be the 75-80 area. So pretty much everything that I said for the 50 and the 20 to 25 applies to the 80. Now, my ultimate target, though, is to get down here to the 65 area. If we get down here to the 65 area, I will be taking profits, and I'll actually be doing another analysis to find out what's going on with this specific pair. Now, if we have the possibility of getting down to 65 cents on this pair, the thing that I am interested in is what would that look like on the, let me get back to the 4-hour chart. What would that look like on the IV rank? Now, we are moving a fair amount of distance, 250 pips or 230 pips to get to 0.65. I need to see what that looks like reflected on the IV rank, because remember what I was saying, I am actually okay with being in a trade that I may be losing some money on, only if I see some progress happen in IV rank. And I know one of the things of progress with IV rank is it must go above 22. If it goes above 22, that's giving me good notion to say that we can continue to see a higher IV rank. Now, I must continue to see that rising IV rank. It cannot close back below it because I'm looking for a picture that looks like this, where we did have that bust above 22 or 23. On the IV rank, yes, we came back down, but we came back down above it, signaling that the market was continuing to push down. After that, we firmly moved into the bearish zone of 50 plus IV rank, and we continued with that for almost a month or so. So pretty much that's my look on this. We have looks like the market is setting up to bypass this 0.65 area. And if that is the case, what I'll be looking to do is to pretty much profit off of that by at least taking 50 to 75% off once it does hit 65 cents, and then just riding the wave down until it hits maybe 50%, or it goes all the way down to 0.625. So that's my outlook. Stay safe trading, keep your risk in order.